Europe is at risk of long-term economic damage. That was the warning from the European Central Bank President Mario Draghi as he addressed the biggest gathering of Europe's economic figures in Brussels.
There are many understandable political reasons to delay structural reforms, but there are very few good economic ones, and the cost of delay is simply too high.
Mario Draghi says the ECB's monetary policies have been relied upon too far and that governments in the Eurozone must now step up with reforms to improve innovation and energise the labour market. Base level key interest rates at the European Central Bank remain at 0%, and its government bond buying programme has been gradually increased further than many economists believe it should have. But inflation remains well below the ECB's target of around 2%, and GDP growth figures for the euro area have been scaled back for 2017.
I think this is a powerful reminder that we need to act, the status quo is not an option, and that time matters really, because if growth doesn't pick up now, soon, it will have an impact, and if we don't implement structural reforms, it will have an impact. So time is an important variable here, and we cannot really drag our feet as we've been doing with the euro area crisis.
And in the meantime, Britain is gearing itself up for its vote on whether to remain a member of the European Union, breeding uncertainty across Europe. With slow growth in the Eurozone and the impending UK referendum, the economic outlook for Europe continues to be gloomy. The European Central Bank wants committed governments to speed up on implementing fiscal policies to try to get inflation moving upwards once again. Jack Parrick, CCTV, Brussels.